Ladies and gentlemen, we have breaking news for Tesla stock that you need to know heading into tomorrow, because this could actually move Tesla stock higher. In fact, we were up over 4% Friday, including the move higher in after hours, and it looks like a larger breakout is coming. Now, you hit a high of $361.53 on Friday. It looks like you retrace that a little bit to the downside, right? At some point. I don't recall when we hit that, but it does say we hit $361.53. That might have been a glitch because I did not see that. But yeah, it looks like that's where we may actually open the trading day. Obviously, futures are not open right now, but it would not surprise me if Tesla is up around 4% from here, even coming tomorrow morning. Here's the news. FSD supervised for the Cybertruck has launched in Canada. Now, you might not think this is important news, but I do think it shows something, okay? One, from a fundamental perspective, FSD is the money maker for Tesla. You get a lot of profits that come in from FSD, okay? It's a very high margin segment of Tesla's business, as you already know. But it does show that Tesla is making efforts to get FSD into other areas. Now, recall what we got from the Tesla team about a month ago. Their plans or roadmap for full self-driving. It includes FSD to launch in Europe and China by Q1 of 2025. Okay, that's right around the corner. And as Wall Street maybe starts to look forward to that, as FSD is now in the Cybertruck in Canada, that is a, well, big thing for Tesla's profitability, especially FSD launching in China. And I do think you're getting to the point in which Tesla stock is going to start looking forward to 2025 a lot more. And you might start to see dramatic moves higher heading into 2025 as people position and get ahead of what is coming in 2025. So basically, you could start pulling forward a lot of the return for 2025. Like, let's say Tesla rallies to 450 by the end of this year, which is the higher end range of my target. I'm expecting 430 to 450. Nonetheless, new all-time highs. Well, if Tesla by the end of 2025 is $550 or $600, you've pulled forward a lot of that gain from, 200 or so just recently. Like before the election, you were $220 per share. You pulled forward like $250 of return from the election until the end of the year. You've pulled forward a lot of that return you may have otherwise seen in only 2025. So I think you could start to get a pull forward here for what we are going to get in 2025 as the markets really start to price that in. And that's part of why you're likely going to see a year-end rally for Tesla. Posted this on X. Let me know if you agree. It said, I say, it feels like everyone is positioned bullishly, but everyone's a bear on X. And that's just kind of how it seems. Like everyone's bullishly positioned in our markets, but there's so many people that are still bearish and people growing more and more bearish, solely really based on valuations. Now, again, valuation is a tricky thing to be bearish on, solely valuations, because valuations don't tend to change until something else changes, whether that is the Fed's direction of cuts, right? If the Fed goes from cutting rates to pausing or to even hiking rates, that would be a problem. That could change the valuation calculus and cause selling in markets, right? People might say valuations are too high. Or if, again, inflation were to ramp up again, which kind of coincides with the Fed potentially starting to raise rates. If, we get really bad tariff policies or, something happening, growth slowing down, that's where valuation matters. But until something like that happens, valuation does not matter to investors. Investors don't wake up one day and say, I'm going to sell Tesla because now the valuation is just too high. No. After that point, you've like went through a short squeeze. The stock has went parabolic to the upside. Like you're $1,000 per share by the time people are like, okay, maybe we've pulled forward too much future return and I want to take some tendies now. That's the problem with being bearish on valuation. And I see that everywhere. And I do think that could be more fuel to power this market higher in the near term. Now, there is a looming correction at some point, and the correction could be aggressive given where valuations are currently at. Some people are saying this correction could happen in December. That's possible. I think it's a start of 2025 kind of situation, and I'll tell you why that is. Everyone and their grandmother says to sell the inauguration, okay? I think there's a lot of, merit to that. I think that makes sense. Now, everyone else, right? Everyone's saying, oh, if we're thinking sell the inauguration, we probably want to sell the inauguration like a couple weeks before, maybe a month or two before. And that's why people are saying December could be a bad month because of valuations, because of looming Trump policies that may not be positive for markets. And I'm just sitting here saying, hey, I don't see the sell the inauguration happening in December when the inauguration is January 20th. Now, this might actually remind you of something else where everyone said, oh, you want to get ahead of the selling in markets before this certain event. And that was the election, right? Everyone figured that, the election would be a negative catalyst. So you typically get selling before the election. But a lot of people were expecting that selling way too early. In fact, you peaked, right, on October 17th. This was the previous market's all-time high. You kind of traded sideways for a while, and then you sold off October 30th, October 31st, and then throughout like early November, you were kind of sitting at some of the low points, and it was getting kind of dicey here. Okay, all the fears came out. We're going to have a contested election, blah, 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 blah. Okay, now, coincidentally enough, this was actually 19 days from the peak on October 17th until election day. Almost exactly from January 1st through January 20th's inauguration day, right? 20 days. This prior, I guess, fear event for markets, or what could have been a fear event, was a 19-day period of sideways to down trading heading into it. Okay, almost identical. If we had seen this start one more day prior, it would have been exactly 20 days before the election. Stocks kind of started to sell off, and 20 days again from January 1st, 2025 to January 20th, inauguration day of 2025. So I think trying to get ahead of any inauguration, sell the news in December is just a little too early. And the animal spirits are running high right now. Personally, I just don't like that idea. The other issue with valuation that I have is if you look at the headline S&P, what is that really comprised of? Okay, it's really big tech. Like 40% of the S&P is big tech. They're trading at like 35 times trailing PEs, the last 12-month PEs. Forward PEs, they're at like 28 times for the average stock in the Mag 7. That is skewing the index to look a lot more expensive than it actually is, okay? And like the equal weight S&P or the median stock in the S&P is actually only sitting at about 18.5 times earnings right now. It was 18 times. We've rallied a little bit. It's about 18.5 times forward earnings. That's historically average. So this market is actually at a historically average valuation, with what I think is going to be lower inflation over the coming 12 months. It's going to be more cuts from the Fed. The markets are only pricing in 3 cuts. I think there's room for more cuts to get priced in next year. Okay, so I think that's the actuality of the situation. Wall Street right now is taking the opposite side of that, or at least a lot of people are. They're saying, oh, we might get less than 3 cuts. Tariffs are going to be negative for, growth. We're going to see higher inflation. I don't see that as actually happening, but that's going to be part of the narrative of why we get a sell the inauguration event. Likely just sell come January 1st. If there is a time to take a little bit of profits, it is probably January 1st. Again, I'm not a financial advisor, but that's part of the issue that I have with valuation. The other issue I have with valuation is, like we seen last earnings, okay? Valuations are relatively the same last earnings that we just had, right? The companies that reported. But what happened? Wall Street just lowered the estimates heading into the quarters. So companies beat. Earnings looked good. And in fact, companies actually did really well. Yes, Wall Street lowered the estimates a lot heading into them, but we beat by almost double what we were expecting, okay, on an average basis. So it was a very strong earnings season. We did not need to lower estimates the way that Wall Street did. We still would have beat, but it wouldn't have been as impressive. So Wall Street can just lower estimates right before, say, earnings that actually, I don't want to say actualizes, but realizes the valuations, because every earnings valuations change a bit. We just lower estimates and boom, we have more attractive valuations again, or a more reasonably, valued market, because now companies just beat on earnings when they maybe otherwise wouldn't have. So there's a lot of little tricks that Wall Street does that kind of tries to justify valuations. Now, I'll sit here and tell you, I don't like the S&P. I don't like the NASDAQ. Too expensive for my blood. Okay? I don't like the risk to reward. We don't know if we're going to have a recession or not. I do like small caps. I do like mid caps. I think that's where earnings could accelerate. I like your second tier AI names like Tesla, like Applied Digital, right? Some of these other stocks. Those are the names that I like. That's the area of this market that I like. I don't like the S&P. I don't like Mag 7. I don't think Mag 7 is going to outperform. And I will bet you that Mag 7 actually has a weak 2025. It could be a bad 2025 for them. And the rest of the markets rally. Imagine that. Complete opposite of what we've seen in 2023 and for most of 2024, where Mag 7 led markets higher. You're going to see a reversal of that. As long as we don't have a recession. If we have a recession, Mag 7 is going to relatively outperform versus other areas. And what that means is if Mag 7 goes down 20%, 25%, the Russell could fall like 50%, right? It's a relative outperformance. Doesn't mean that, Mag 7 is going to be green or do good. It just means they're going to do better than small caps. It is way too early to know if we're going to have a recession. In fact, Morgan Stanley put out a note over this weekend that we're not going to see growth actually slow down until 2026. And, if everyone, starts to think we're going to have a recession in 2025, if that growth scare does come, then we'll obviously have more information to go off of. But right now, people are making conclusions, jumping to assumptions, still with the open-ended question of, do we have a recession or not? And that's why I ultimately think we're going to have a nasty correction, right? I'm not scared about Trump policies. And do you want to know why I'm not concerned? Because 10-year Treasury yields, the stock market, okay? Trump did not get elected to crash the economy. I'll tell you that now, okay? You can have your own opinion on that. Of course, you're entitled to that. That is, your constitutional right to have your own opinion and free speech and all of that. I would say with a 99.99% certainty, Trump wants the markets to go higher. Just imagine. I mean, the S&P has hit like 30, 40 all-time highs this year. Do you really think Trump wants to be the guy that ended the party for the markets? Absolutely not, because Trump, his cabinet or whoever, they're going to know, they do know, if markets fall, that's a real problem for job security. That's a real problem for growth, okay? A lot of people forget the main reason why we have a stock market. If I were to ask investors, what's the point of the stock market? Why was it created? Most people would have no idea. None. They would say to make money, to invest, right? No, the main reason for the stock market is so companies could raise capital to grow their business, to sell stock, right? That's what they do when a company IPOs. They sell stock. They raise capital. Okay, that was the main reason for markets. So if you take away that ability, if stocks fall a lot, then you don't see a lot of IPO activity. You don't see a lot of capital being raised. That really slows down the actual economy. Okay, so I'll tell you right now, Trump's going to do whatever he can to keep the stock market as strong as possible. Because if you don't, you're the laughing stock and you got outdone by Joe Biden. Doesn't want that to happen. I'll tell you that right now. I don't even need to know the guy personally to tell you that. Now, tariffs, you could tariff certain areas, but if they start to talk about the wrong areas, the markets are going to react. 10-year Treasury yields are going to react, likely go higher. That's going to make servicing debt, raising new debt, that much more unaffordable and put the U.S. in an even weaker place. Again, 10-year Treasury yields also going higher slows down the economy. It's not something that would last, right? And I think there's going to be a little bit of fishing here, right? To say, hey, we're going to tariff this area, or we might tariff that area and see how the markets respond. Okay, that's probably going to happen, and it's going to create more volatility. But ultimately, bad policies will not be enacted. I think that is an upside catalyst for 2025 at this point, because there is a lot of fear out there that we're going to have some crazy tariff policies. And once we realize we're not going to, that's going to be really good news. Now, over this weekend, Donald Trump chooses his hedge fund executive, Scott Bassett, for Treasury Secretary. So this guy, long supporter of Trump, Trump in his statement called the prospective nominee one of the world's foremost international investors and geopolitical and economic strategists. Trump's decision to name Bassett to the key position follows a week of intense speculation about who would win out. So Wall Street might like a Wall Street guy being the Treasury Secretary. And I wouldn't be surprised if you see, markets move higher this week on this appointee. Now, specifically for Tesla, just looking at the stock on a technical basis, I don't think it could look better. You're above this trend line. You closed above this uptrending trend line. First time since at least November 11th, in which you did get rejected after that. But as long as we have a strong week this week, I think you're going to have a really strong week for Tesla stock. And I think the right catalyst with the Treasury Secretary nomination, with seasonally, bullish trends, they are intact. And again, let's face it, market valuations, they're not too extreme for the average stock out there. And after all, what do they say? They say bull markets are born on pessimism. They grow on skepticism. And they die on euphoria. I'll tell you, 2021 was euphoric, okay? 2020, the end of 2020 was euphoric. Eventually, that party was going to come to an end. And it was kind of easy to see that that party was coming to an end in 2021. Now, even myself, I did not expect inflation to go up that much. I did not expect the Fed to aggressively raise rates the way they did. I still vividly remember to start 2022, Wall Street was expecting 3 cuts, and by March, we got 3 cuts in one meeting. Like, expectations completely flip-flopped. Okay, from 3 cuts throughout the entire, or three hikes throughout the entire year, to getting 3 back-to-back meetings of 3 cuts at each meeting. 75 basis points of cuts 3 times in a row, and then 50 basis points, I think, twice, and then 25 basis point hikes after that. Like, I don't think we're that off sides with expectations here. I don't think markets are that euphoric, and for those reasons, I don't think we're at the point where markets are in total euphoria. There's still a concentration around valuations. People, for the most part, right? You don't see a lot of stocks just running for no reason, or everything running for no reason like you did in 2021. So people that say the markets are too euphoric here, I don't agree with that. Now, is it healthy to be euphoric? No, but you could definitely be a little bit more optimistic than we are now. There's definitely a decent amount of bears still out there. Now, option activity for the past week in Tesla was quite positive. You had a positive order value of 79%, 1,905 different trades, totaling $1.78 billion. So, it was a good week last week for Tesla options. And at this point, the options are really helping to drive Tesla stock in one direction or the other on any given day. And lately, it's obviously been to the upside as people buy more options, especially, short duration options that are, close to the money or just barely out the money. A lot of this being done by hedge funds and institutions. It causes market makers to go out and buy more stock, which pushes the stock higher, and people buy more options because the stock's going higher. And this is what you call a gamma squeeze, right? You're seeing a slower gamma squeeze. It's not super aggressive at this point, and definitely has, I think, legs to get more aggressive from here. Now, the short position in Tesla, also something worth watching. This is really not contributing much to the rise in Tesla. Shorts are really not covering in massive numbers, but they could by the end of this year. By the end of this year, to push us to 430 or 450, I think you need some degree of shorts covering from where I sit right now. That would be a $100 move higher for Tesla stock from here to get to my higher end target, $80 higher to get to 430. Now, short interest or free float, 2.79%. Doesn't sound like a lot, but on a company worth over $1 trillion, what, 1.2 trillion now, that's quite a bit. The dollar amount sold short, $26.5 billion, and this has really ballooned recently from $15 billion to $26.5 billion because of the losses short sellers are taking, not because they're now shorting more stock. They've actually covered a little bit. Short interest was 2.86%. Now it's down to, again, 2.79%. You have 78.05 million shares that are currently sold short. And even on Friday, you had about 421,000 shares that were covered on. So if I were to put on my wizard hat here, I would say a move to the 380s, 390s is not super improbable by the end of this week. Now, to get to 380 would be a 7, almost 8% move higher. To get to 390 would be a 10.5% move higher. I mean, you could be pushing $400 by the end of this week, which would be a rally of about 13.5%. Honestly, that doesn't sound too crazy to me, given the setup that we currently have. Keep in mind, markets are open full day for trading Monday, Tuesday, and Wednesday. You are not open at all on Thursday, and you have a half day on Friday. So it is a very short week. So yeah, it could get pretty nutty to the upside in a short amount of time. This does tend to be one of the strongest weeks for the markets throughout any given year. And even individuals like Tom Lee have come out and said, hey, we could be at 6,100 by Friday, which is about 2.5% upside from here in the S&P. That would be a new all-time high. So there's others that also think this week could be a good week. And again, I think the Treasury Secretary pick is going to be seen as positive for markets. And then clearly Tesla's news today that FSD is entering the Canadian market, I think is also going to be good news specifically for Tesla coming for this upcoming week. With that said, ladies and gentlemen, let me know what you guys think of this information down below in the comment section. You guys have a great rest of your day, and I'll see you in the next one. Say bye. Say bye. Say bye-bye. Say bye-bye. Hey. 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 Say bye-bye. Say bye-bye. Say bye-bye. Say bye-bye.